Welcome to DWS Market Update. It is extremely difficult to keep track of the back and forth on tariffs by US President Donald Trump. After the stock markets plunged in the wake of the tariff announcements on April 2nd, the US President made an apparent U-turn just a week later and postponed some of the tariffs. This chart shows, in a very simplified manner, the threatened tariffs on April 2nd and on April 9th. The key point is that the average tariff has not fallen that much at all, especially since tariffs on Chinese products have now reached absurd levels. Even though markets have already recovered some of their losses, the stock markets, and the US market in particular, are suffering from the tariff mess. However, what is currently happening in bond markets seems even more important to us. While the strong fluctuations that we have recently seen are common to stock markets, bond markets usually behave much more rational. The current fluctuations are a clear sign of great uncertainty on the bond and currency markets. Tariffs should actually strengthen the US dollar. In fact, we are seeing a falling US dollar even though US yields have recently risen. Apparently, investors assume that the negative growth effect of tariffs is stronger than the inflation effect. Pessimism about the economy is spreading in the US. This also explains why safe haven currencies such as the Japanese yen, the Swiss franc, and the euro have recently benefited significantly. This development could be due to the fact that more and more investors are turning away from US markets and looking for alternatives elsewhere. What does this mean for investors? Well, international investors would certainly be well advised to diversify their investments globally and to reduce the high weight that the US investments have recently gained in many portfolios thanks to the good performance of US stocks in the past years. After all, no one can say with certainty how things will develop on the tariff front. In our opinion, Europe in particular currently offers comparatively interesting investment opportunities. And with that, I say goodbye until next time.